Well, good afternoon. We're going to start. What we're going to cover today is what's supposedly are the fringes of the financial system. If you've seen the title of the lecture, we're supposed to talk about tax havens, mafias, shadow banking. I'll wait for the... So we're supposed to talk about shadow banking, mafias, tax havens, things which are supposed to be on the fringes of the financial system. What's interesting, however, is that some incidents and accidents over the past few years have suggested that these things which are supposed to be marginal in terms of the classical or traditional representation we have of the financial system turn out to be much more central than was imagined. Take, for instance, shadow banking. Shadow banking is a phrase which was introduced by Paul McCullen, as far as I remember, from PINCO a couple of years ago, he was suggesting that what is responsible for the subprime crisis is what he called shadow banking. And what he means by that is a number of things which are lightly regulated compared to banks or insurance companies. Why are these things lightly regulated? Essentially for historical reasons, because they appeared in the process of finance operating, and they're essentially in the shade because it takes time for the regulator to notice, it takes time for the legislator to pass laws, and it turns out, therefore, that a number of things may appear, taking some functions which are classically those of banks and of insurance companies, but start doing these operations, and because there's no regulation preventing them from doing so, they will start doing it. At the same time, all the guarantees which are set up by the regulation in order to make these activities relatively safe, and we know that even when they are regulated, they're not entirely safe, as we've seen about insurance companies like AIG, who went bankrupt with a deficit of being in the red by $83 billion in 2008. Even when they are regulated, it's not that easy to make sure that the system is entirely safe. But when they're not, it's even more difficult. So for instance, if some kind of institution starts taking some risks, but there's no rule there saying that they have to make provisions, that there's no instance which is a lender of last resort, then the risk is of course multiplied. And if a large part of the activity is actually located at some point within that part of the system, then we have there the potential for chain reactions, for things that bankruptcies, they will generate other bankruptcies through a domino effect. It is regarded that shadow banking now represents something like a quarter of the financial activities. And as I said, without the guarantees which are provided by a legislative framework for those to operate. What McCullen meant about the responsibility of the subprime crisis was that it is essentially through these institutions which are part of the shadow banking sector that the crisis started. If we look at what are these institutions? Well, typically there are things like hedge funds. There are what are called special vehicles, which have been created especially for securitization. There are lenders which have not banking status. There are a number of things which are there, in which most of them actually have not started as being as such, but have started as having their roots within the traditional banking and insurance sector. They are have been outsourced, if you wish, from that classical part of the sector to become entities of a different nature. What is the bias typically? It has been through operations which had a particular purpose, which is that some activities within banks, in order for these banks or these insurance companies to reduce the regulatory capital they have to put as reserves, as provisions, they could put some of their activities off the balance sheet, meaning that these activities have not to be mentioned on the balance sheet. They can be delegated to some other entities and therefore become invisible. And that's how most of that shadow banking sector appeared. It is lightly controlled, so that's advantageous. But essentially, the main purpose from the very beginning was to reduce the amount of money, capital that had to be put as reserves as a calculation, as derived from the figures that appear on the balance sheet of the company. What is that? How did these off-balance sheet activities start? Well, actually, it was regarded that, as you know, if you looked at the balance sheet of a financial institution, you know it's a very bulky document, and it was regarded that some activities which have no possibility of impacting negatively the future of the company in terms of precisely of capital, of solvency, that these activities could be mentioned could be off balance sheet, would not appear on the balance sheet as they were not relevant to the possible reader of these documents because of the fact that they had no impact on the operation of the company itself, on its financial health. There's a famous rule, FASB 140. FASB is the acronym for Financial Accounting Standard Board, and Rule 140 is very controversial because it came in the news also during the subprime crisis. It is the rule which allows that securitization can be off balance sheet. Securitization, I just remind you, although I've mentioned a number of times what it is to take a number of credits and assemble them, gather them together in order to make them into a financial instrument, a debt instrument by necessity, which will look and operate like a traditional type of instrument, and where I would say the granularity, the fact that it's composed, for instance, of 6,000 different mortgages, of credits on housing, that it doesn't appear on the surface for anybody who buys that product, meaning that for the person or institution that lends money to the person who have subscribed to one of these mortgages. And FASB Rule 140 made it possible in particular for mortgages, to be assembled together into these asset-backed securities or mortgage-backed securities, and that they would not appear anymore on the balance sheet of the company that's issued them. That's been regarded in the years, in the aftermath of the major collapse, meltdown of 2008, as one possible reason for the seriousness of the crisis. It is regarded that there was that was a way for companies who would securitize to become very light on due diligence in looking into the quality of the product. If it's off balance sheet, well, actually you wash your hands of it and the story is over. And to that extent, you would there would be a moral hazard in terms of the quality of the product that you're putting together, because the risk would actually have been shifted entirely to the buyer without any responsibility of your own. It turns out that that's not exactly the case with securitization. It's not exactly the case that it would be so, because it's part of the securitization process that if you put together, indeed, let's say 6,000 individual home loans, and I say 6,000 because this is actually the very typical number. It turns out that if there were any accidents about these individual loans, there was a recourse from the buyer. They could actually turn towards the issuer and ask for the replacement of these individual loans. So it's a bit, I would say, it's too succinct and it's too simplifying too much to say that there was a FASB 140 allowed really to remove all the entirety of your responsibility from the mortgages. The fact is that the information about individual loans in what is called prospectus, which is actually the documentation around the issuance of one of these ABS or MBS, doesn't give you, the borrower, enough information really for you to be able to spot exactly where things are going wrong. But saying that there was a total, that responsibility had totally been severed is not the case, because there was a recourse possible from the buyer. So there was not so much of an incentive for a issuer to put mortgages which would be of very low quality. In the current discussion, there's a lot being said, and even recently about. Then I got distracted by something else I want to tell you. Well, anyway, I forgot what it was. I was about to. It was one more little detail about the operation of these things. Another aspect, and this is very much in the news, are the discussions which are taking place around Dexia nowadays, and about a particular aspect of this, which is the following. And then there's a discussion going on in parallel in Belgium and in France because of the some attempts are being made now, strangely enough, by the legislator to try to, how would I say, retrospectively remove some of the responsibility of people who were involved in particular type of contracts. There was a paper on my blog, not written by myself. I think it was over the weekend about that issue. And today there is one article about that in La Libre Belgique, and another one in Le Monde in France. And this is I would say this is a kind of real showcase illustration of what we can discuss in a course like this. Because I would say the question of ethics, it's quite simple. As you say, well, you need to be virtuous, and if you're not, then that's a bad idea. But when you start looking in very complicated cases, then the issue becomes much more hairy. It becomes much more difficult to make an actual decision. And in this case, it's around the notion of what is the general interest. It is important that government states look after the general interest. But in some particular cases, it becomes quite complex not complex, but difficult to resolve what is exactly the general interest. it's difficult to go, it's impossible to go into the details of the whole Dexia affair. I've already mentioned some dimension of it lately, but this one is the following. The typical contract that was offered to municipalities was a contract where they would borrow money, but had been attached to that contract. It's called a structured credit. It was attached to that an additional contract that made it possible to reduce slightly the interest rate that the borrower, meaning the municipality, would have to pay. And that additional contract was very bizarre in that instance, because it was a contract that was, apart from lowering the interest rate, the coupon for the borrower, which is advantageous, was something which was essentially an insurance contract for the lender. That, of course, on the paper should be totally irrelevant, shouldn't be there. I mean, it's quite obvious, because what the lender was protecting itself in these instances were, for instance, exchange rates between Switzerland, franc Swiss, and Swiss franc, and the euro, things of that type. I mean, what was the point for a small town in Belgium or in France to have to act as an insurer on the exchange rate, as an insurer for the lender on these things? And I think I've mentioned that briefly last time, but for a very different reason. What happens now is that a law is being proposed in France in order to remove all responsibility of Dexia in this particular case. Why is that? Well, it is because the French state, being now the guarantor, having provided the guarantee for whatever Dexia has to pay to any municipality or any lender, the state has taken over. It is now, the French state, for instance, is responsible for, at the level of 75% of what Dexia has done and is responsible for. Now, in order to protect itself against any claims from the municipalities, there's a proposal of a law that would exonerate the state for errors having been made in the past. The result is that the whole responsibility of the people who made these strange decisions at the head of Dexia is being removed from them. The law, if it passes in France, would make it impossible for anybody to make any claims that these contracts were illegal. My view, and I defended, I think it was last month or the month before, in my column in the French daily Le Monde, that the type of contract that was offered to these municipalities was pure and quite simply swindle. I mean, it was dishonest. They were not, people who got that contract were not told what they were offered. They were not told they would start acting as insurance companies for the lender, for Dexia or the other banks that were offered that. And there's no justification for a municipality to become to act as an insurance company for anybody. So, I mean, I would say somebody in the municipality reading my paper in Le Monde would go and say, well, this, you know, I mean, that guy says that was really dishonest. And one of them has done that, not after having read my article before in La Seine-Saint-Denis, and there was a case being discussed, and there was no agreement that the product was dishonest as such by a tribunal, but it was underlined that the interest rate was not properly mentioned on the document, and that therefore there was something illegal in the case. And this opens, of course, a door for anybody who wants to go and protest, go to court, and I think it's something like a potential 300 cases. Amounting to a potential of 15 billion euros, so it's not like a small amount. And in order to protect itself, the French state, in order not to have to pay these 15 billions, is trying to pass a law that would retroactively prevent anybody for going to court and trying to claim some money from Dexia. Another dimension is that if a law like that was not passed and that the state would have to pay an additional 15 billion, there's a risk that the notation from the rating agencies, the rating, would be downgraded, making it more difficult for the French state to raise the 12 billion it wants to raise in order to have as a provision for that particular case in the within the setup which has replaced Dexia after its bankruptcy. So the notion which is defended, I guess, by the state is that the general interest is that the state doesn't go bankrupt, that it doesn't have to pay additional money, which it would be, of course, the taxpayer who, at the end of the day, would have to pay for that money, and that would be the general interest. But what is attached to that is the exoneration of any responsibility of all the bankers who made these terrible decisions to sell these dishonest products to the public. So is the general interest that general principles of ethics are defended, which would not be the case if that law is, that's quite definitely clear, if that law was passed, was adopted, or can we claim that the state plus the bankers should be protected because they amount to general interest? Why? Because behind the state is the taxpayer, and the interest of the taxpayer is not to pay more than needed, because as we know, it will translate at some day or other into higher taxation on this or that. Can we betray a constitutional principle for practicality, for what is sometimes called with a German word of realpolitik, that things are this way and not otherwise? The difficulty, of course, the major difficulty is that if you allow in one case that the law will just say, we won't go after the bankers for their wrong decisions, what prevents that principle becomes general? Because it's just a generalization in that case of the too big to fail principle, saying, we can't let these banks go down because we taxpayers would have to pay for that. But that's forgetting that in 2008, when it became quite clear that some banks were too big to fail, that it was universally said these banks need to be broken down until the units, the individual units which are recreated, are small enough that they do not produce any systemic risk. That's what was said by anybody around. The specialists of the economy. This is the only possible approach. And then we know it's through lobbying that the financial sector managed to have that view reversed and to be replaced by some very vague principle that an additional 1 or 1.5% of reserves should be constituted. And once that was agreed, more or less by the public at the level of the Bank of International Settlement, then the the banking sector start lobbying, saying, oh, well, we can't pay that 1 or 1.5 additional percent anyway. So, I mean, what about that? So now we're told that we have to break some constitutional principle because these banks are too big to fail. But the fact is that a solution to that, too big to fail, had been offered and was actually refused by the banking sector through major efforts of lobbying. This is the kind of quandary in which we are. The times we're in are the best times to discuss ethical issues in finance. I just received that there's a book published by Cambridge University Press about ethics in finance, and it is being sent to me so that I can review it, and of course, hopefully from the Cambridge University Press point of view, that I would recommend that you read that book. But I won't do so before I read it. As you, I mentioned that off-balance sheet is being the source of most of the creation of the what we call shadow banking. As you know, was because either you know it or I already mentioned it is through the same principle that that the Enron company became so fragile. It had put anything that would look bad on the balance sheet was actually put off balance sheet by creating some of these special vehicles that would have the responsibility of actually dealing with what was so dangerous for the company itself. And it was constructed in such a way that it would look, from a legal point of view, as being safe. Why? Because these special vehicles would receive some assets, and these assets would be regarded as being, safe enough that they wouldn't be any problem attached. It is a company, a corporation cannot speculate itself on the price of its shares, on the value of its own shares, as being one of the products that it's dealing with. And the one strategy developed by Enron was precisely that, to find a way to create some special vehicles around the value of the company, of the share, the stock of the company. It couldn't do it directly, but it could do it by using some derivatives on the value of the company. And so the only asset of some of these special purpose vehicles would be simply the value of the share of the company. That would be what would be the wealth that is representative of these special purpose vehicles. Now, of course, as soon as Enron or any company doing the same would be in trouble, the value of these the share would plummet, and the solvency of the special purpose vehicle would evaporate, of course, and that's what happened in a number of cases. In the case of Enron, it's actually a very small technicality that there was not enough capital in one of these special purpose vehicles that triggered the whole process, because it had to be, because some rule had been infringed in the operation of that SPV, its figures had to go back into the balance of Enron, and it looked particularly bad at a particular bad time, and that triggered the whole collapse. Of course, we can speak endlessly for Enron because there are so many things that were going wrong at that company at that time that there's at least a dozen issues of that type that could also be mentioned. Paul Krugman mentioned that he's one of the people who said that shadow banking was responsible for the crisis. He called the process what he called it malign neglect. And he wrote in one of his columns, he wrote the following: anything that does what a bank does, anything that has to be rescued in crisis, the way banks are, should be regulated like a bank. And that, of course, I mean, that's a very true principle. There's no reason that if the regulator regards, for very good reasons, that any type of activity of the type of an insurance requires some provisions in order to be able to meet the claims in case of an accident, that it should be regulated as an insurance company. And in particular, going back briefly to that Dexia case, if Dexia was offering contracts that put the clients, the borrowers, in a position to act as an insurance company towards Dexia, it had to be regarded as an insurance company, meaning that it had to put some sufficient reserves and provisions. But of course, I mean, this was totally neglected. It's bizarre that when that French court looked at these contracts, the only thing they could find was about the fact that in the faxes being sent, the interest rate was not put properly, because to me, it's not the issue is not at all that it was a derivative product at all. It was just that there's something totally wrong in putting that together, and that the borrower becomes is put in the position to act as an insurance company. This so much for shadow banking. I'm going to say a few words about tax havens, what I call tax havens. If we think, I mean, I mentioned the taxpayer just now. If we think of taxation, why do state impose a tax on the citizens and on the residents, also to some extent? Well, because there are a few things which need to be done. The state needs money. It provides some services, like putting together an army or a police force. That costs money. There's an educational system. There's a health system that is more or less, depending on countries, supported by the state. There are a number of things which are being done by a state. It needs to operate. Also, it needs to pay its civil servants. It needs to pay the people who work in ministries, as administration or government, and so on. And also, as you know, most states have use some of the money that's been collected to taxation to redistribute it in one way or other to people who are in need to be helped. So the protection being offered by the state is in terms of physical protection, like the police will offer you. It's protection also by having a pension system, a retirement system being organized, and so on. But because of the element of redistribution, the people who pay more taxes feel to some extent that the system is working against them, and they have a tendency to try to pay as little as possible. And that's called fiscal optimization. There are rules which prevent you from being too blatantly optimizing and preventing. I mean, some fiscal optimization may be regarded by law as being pure fraud, and you're prevented from doing that. The amounts that escape the state in that particular perspective may be huge. It may be very large amount of money. The system may be rigged also. Actually, as you know, the ship handlers of Greece have ways for not being regarded as such within the fiscal system of Greece. Because of that resentment about redistribution, in countries, a culture may develop about the fact that it's not that serious to evade tax. One case which was interesting, I think it was something like two years ago, about an MP in France, a lady who was accused to have invested money in some I think it was drug-related activities, defended herself as saying, well, this was ridiculous because it was simply tax evasion, the money in question. That was before the Cahuzac affair that developed in France, where it turned out that the Minister of the Budget was himself a tax evader. It was a French online newspaper, Mediapart, who revealed that, and for a long time they were in trouble for talking about that until the affair developed entirely. Another case was the prior budget minister, Monsieur Worth, whose wife was in her job was to be the tax advisor, optimizer of Madame Bettencourt of the L'Oréal business family. To that argument that redistribution works against the wealthy, the recent developments show that that's not always the case, because as we know, since 2008, in most Western countries, the redistribution has actually been towards the wealthiest, not by being offered money like you could, through food vouchers or something like that, but by rescuing the banks, and that explains why there's been an acceleration of concentration of wealth since 2008 in most Western countries. The inequality in distribution has become worse. I think I mentioned that the figure mentioned by Joseph Stiglitz the other day of 110% of the wealth being created in the United States in 2011, going to the 1% at the top in terms of wealth. Tax havens are usually regarded as being small countries, like Cayman Islands, British Solomon Islands, but that's not necessarily the case. The state of Delaware in the United States acts very much as a tax haven. Countrywide, the company I was working for in the final days of my financial career, was actually registered in Delaware, and it's extremely typical. The International Accounting Standard Board, who decides about what are the financial accounting principles, is a private company, and it is registered in Delaware as well. The City of London, so-called City of London, is a tax haven, and so is our Jersey, Guernsey, the Isle of Man, a number of others. When the Eurozone was created, Luxembourg was a tax haven, is one of the nations very much at the core. When there was a common market with six countries, Luxembourg was already part of one. There's been a high level of tolerance towards tax havens. Why is that the case? Well, one of the reasons, as I mentioned, is the fact that the wealthy think it's not a bad thing altogether to evade paying tax, but there are a number of other reasons. One of the other reasons is the following, which is that if you look at the evolution of property rights over let's say on the period starting around 1850, because that's when things start changing, and it starts in the United States. If you start looking in Western countries about the evolution of property rights, you see that there's a divergence operating at that point. The property rights are defined I would say, in a very broad manner in the early 19th century. Property is very much protected by the law, and most of the time also by the Constitution when there is such thing in a particular country. There are different aspects to property. One is called abusus, And that's linked to the possibility of the owner to do really what he or she wants about the property, including destroying it if needed. You may have something that may be very useful to the community. I don't know, an old master painting. And in the very old, I would say ancient definition of private property, well, it would be yours, and that, once you paid for it, and you would be allowed to destroy it. Now, it was already mentioned in the Constitution of France that in the revolutionary one from 1793, that no, I mean, you're the owner, but you're not allowed to do everything. In particular, if it goes against, let's say, the common good, you're not allowed to do it. So it started being some restrictions to that principle of absolute rights on something that you are the owner. And it's quite amusing to know the case which made a real switch in French law, because it's an amusing case of that restricted in a I would say dramatic way the notion of abusus in the property definition in France. It was something like 1915, and there was a man who had erected poles in his field, because there were some. That's only the colloquial names that comes to my mind of blip. But what is the proper name for a blip? It's a these big inflated balloons that can be used for. Zeppelin, that's one particular brand, I would say, particular genre. But how do you call it? In French, I know the word is dirigeable, but I don't remember how you say in English. But anyway, the French army was using some of those balloons in order to observe the war fields, the battlefields. And that particular man was annoyed by that, and to prevent his neighbor to be one of the fields where these balloons would lift off, he had put these poles erected in order that it would puncture these balloons if they were trying to land on his property. And there was a special law passed in order to prevent cases of that particular type. But over the centuries, what happened is that there's been more and more restrictive conditions attached to private property. What? Rigid hardship. Rigid hardship. That's not commonly used. Thank you for finding it, but I doubt many people would understand what you mean by that. So I'll stick to my blip. But what happened in the meantime is that as far as moral persons, like corporations, companies, the law did not evolve in the same way. There were very few restrictions, and most of the time not at all. So there was a splitting. Individuals could not do so much anymore about their properties, all the things they owned, but companies could still do as much as they wanted. And it became therefore tempting for individuals to start to find ways to strategize in order to have the same ways as companies rather than as individuals. And the tax havens became a place where you could actually do that. They use a particular type of contract in Anglo-Saxon law called the trust. The idea of a trust is, how would I say, quite positive in its principle. The idea would be, for instance, to protect an estate belonging to a particular family. And let's say you have a large amount of land, maybe a couple of castles, an art collection, and so on. And you say, as an individual responsible for that, well, this belongs to the family as a whole. What we're going to do, we're going to create a trust. The trust will be responsible for that estate. And some outside people who have some understanding of running an estate would be appointed, and they would be responsible for that operation. What you could do and what people found out very easily, is that by some connection through a number of tax havens, you could actually go back to becoming not you who had in principle released your rights to run the trust. You could be actually the person who would be responsible of running it. And in that process, you would have transformed your rights of an individual into the rights of a moral person. And this has become extremely common. Rather than simply tax evasion, these tax havens are very much used for doing this in particular. States who claim they're fighting against tax havens, like there was a meeting in, I think it was in 2009 or 2010 by the G20, said war on tax havens, and nothing much happened. A number of things happened that I will mention, but not that much. And why would that be so? It's because all of these states actually need sometimes, or think they need, to do things which shouldn't appear on the surface, and tax havens are a way of doing that. Because they're not only tax havens, they're essentially havens because the legislative process is very light altogether. They are essentially opaque, but opaque on a number of issues, not just simply on the issue of tax evasion. If a state wants to finance a secret operation, they will go through tax havens. If there's a temptation to finance some political campaign, for instance, through bribery on big weapons, armed contracts, it can be done through tax havens. Typically, there's been a case recently. Some people are taken hostage. The state says, there's no way, the government says, there's no way we're going to negotiate with these people. And of course, money is being passed, there's a ransom being paid. It can't go through the official banks of that particular country, so it goes through the tax havens. Another aspect which explains why states actually will not move against the tax havens is linked to the very structure of the network that composes these tax havens. It turns out, I mentioned the City of London, I mentioned Jersey, Guernsey, Isle of Man. A large number of these other tax havens are linked to the former British Empire. Singapore, Hong Kong, etc. The British still have some kind of supervision on what goes on there. Apart from that aspect, the UK is a democracy, but it is a nation which I would say is trusted by the other nations which have a legal system, have a constitution, are working within an understanding that some order needs to be maintained. If you think of, and here I'm entering in another aspect of our discussion, dirty money that derives from drug trafficking, prostitution, arms contracts which are not state organized, briberies, and so on. There are two possibilities. Either or the money that circulates there has no way to get back into the official system, or it has. If that money that derives from these activities has no way to get back into the legal system, it will develop a parallel network. And that network will not be state supervised in any way. It will probably be regulated by mafias. And it will be a system that will be totally opaque to any of the authorities in the existing countries. If you don't want that to happen, you have to allow, although you cannot allow it officially, but you have to find a way that that money gets back into the system in a way that it is supervised, even if only lightly. But now, as we know that NSA is actually recording every possible conversation of honest people and dishonest people, you understand that there is a supervision going on. And it has been kind of agreed that, let's say, it's better that dirty money gets back into the system under some very light supervision rather than forcing it to develop as an entirely different system. Why is that dirty money being produced? I would say, and there I talk essentially as an anthropologist, because for some of these activities, our societies have never found the proper line of approach. We regard these things as, we call them necessary evils, like prostitution or drug trafficking, and from time to time we go back to these issues, and there's a law being examined currently in France about prostitution, saying that, you know, soliciting is not a crime, but the potential client who was taken red-handed will actually be fined and so on. And on all these necessary evils, we've never really developed a proper approach. We regard the drug addict as a culprit, but at the same time a victim of some type of circumstances, and we've never really, so far, over centuries and thousands of years, found a totally, I would say, safe and consistent way of dealing with these issues. And that leaves that sector. I mean, at the time of the prohibition of alcohol in the United States, it became very apparent. If you prohibit something which, in fact, it's nearly impossible to prohibit, then immediately you have the choice of reversing your decision or letting some mafia or gangsters dealing with it. Why do mafias exist altogether? Essentially, in our societies, because of the it is regarded as a responsibility of the state to protect private property. That requires a lot of resources. Police force, they need to be able to go everywhere. Tribunals, where the people who are caught infringing laws will be tried. Prisons, where people will be jailed, and so on. This is heavy. It requires, in particular, resources, financial resources, and so on. And so it may happen that in some places, police doesn't go anymore because it's too dangerous. Again, in the case of, I was told, oh, you know, you're coming back Saturday? At what time? Well, I say 11. Oh, be careful, you know, it's 11, it's not so safe in Gare du Midi anymore. Why not? You know, why not if it's the case, if it's not simply a rumor? There's discussion in France about some neighborhoods in Marseille where I was 2 days ago. Well, don't go in that particular neighborhood. In one country in Africa where I was at some point, I was told, you can get out of the hotel, but only 2 blocks up the street and 1 block down, because beyond that, it's, it becomes the middle of nowhere, and there's no protection. So what happens? Well, people need protection, and in cases like that, well, it's left to the, how would I say, inventiveness or the initiative of other people to say, I'm going to protect you, and but you have to pay some, pay some money for that. And if you don't believe that, well, they're going to break some of your property to show you how dangerous it is not to comply with this. This is another thing that we have been dealing with as an issue all around. Some countries, as you know, in some countries the order vanishes, collapses altogether, and we have situation like in the case of Somalia, which is currently a state where there's nothing much being organized at the state level. In the case of corporations, we have an issue which is parallel to the one I've just mentioned about trusts and about tax evasion. That the bigger you are, the better organized you are to actually try to evade payment of taxation. And a figure that I saw mentioned this morning is that the CAC 40 in France, of the 40 largest companies, 4 of the companies on the list do not pay any tax at all in France. A case that was discussed last year was, and there was a hearing around the company Apple, because it turns out that 60% of the financial activity of the company Apple is not taxed anywhere. In the common understanding of tax evasion, well, you will try to pay tax in a place where it's very, very lightly the case. You will, for instance, make sure that, let's take the example of the Eurozone, that most of your sales are supposed to take place in Ireland. And how could you do that? I mean, because obviously, I mean, you can't have all your shops, stores being there. Well, you can regard, for instance, that all the payments that are linked to intellectual property, like the brand and so on, that actually they're being, charged in Ireland. And if the taxation level is something like 4%, well, you will try to do it over there rather than elsewhere. The strategy used is called transfer prices. Transfer prices makes it possible for a company that's distributed over a number of countries to decide where they assign the price of things. Let's say you have a very small part of your business which is in Guatemala, and it turns out that, well, for bold points, that's a country in the world where they're the cheapest to buy. Well, you will put all of those you will put in the assigned to be actually being acquired in Guatemala for your company, and this is the way you will be able to do so. Most companies had to, were located in one way or other in one particular country. It turned out from that hearing of the Apple company that they had managed for 60% of their activity to be located nowhere. They were playing so well the legislation of different countries against each other that it was possible to set it up in such a way that there wouldn't be any place in the world where it would actually happen. The consequences of all this, as you can. Oh yes, as I said, I would mention that there is some progress in terms of the tax evasion. It used to, when it was discussed at G20 level, that there would be an offensive, an onslaught on the on tax havens. It was said that there would be agreements, essentially bilateral agreements between countries, such that if one country asked another country to get some information about tax evasion, then it would automatically be provided. The danger there is the danger that that's being very well described in some books about what happens in reality in that case, which is that there's not enough personnel in the tax bureaus in order to process all the cases that will need to be processed, and that therefore, first, there are very few requests being sent to other countries, and when their information is coming, well, there is very little manpower for actually analyzing the cases. There was an example given in a book, an interesting book, an American book called Perfectly Legal, where the author had to actually follow up on one particular delivery of information. There was something like 5,000 files had been transmitted from one country to the other. 200 of these cases had actually been investigated and letters sent to people, and only 50 people had any control of what had happened. So that was 1 out of 100 cases that had been examined. What is being installed recently is different, is that there would be automatic transmission of information between countries. That could possibly lead to a better treatment of the issue. Of course, what would be needed then is that some of the money, like some of the billions which are used for surveillance of the whole population, could be used instead for dealing for tax evasion, in particular in the light of the important amounts of money that could be saved to the taxpayer. Yes.
Why would the tax havens agree to that? What's in it for them to agree to that?
In the current context, I think it's essentially an issue of image, I would say. I think there's sufficient outrage appearing in the public opinions that countries would like to do something about it. An interesting case is the evolution of the situation in Switzerland, where there's been a real shift. 10 years ago, you would speak to any Swiss citizen, and they would, say that the most honest country in the world is Switzerland. With the evidence coming out of how the system actually works, it's becoming increasingly difficult for that country to be proud of the image that emerges. And I think that's one of the reasons. I think the Swiss want to stick to that nice image, and when the evidence becomes really damning, I think that leads people to in a shift in representation. The fact that they have these referendums that allow citizens to ask for changes also produces a dynamics which goes against the in the right kind of direction, because even if these finally these proposals are not being voted, there's still a lot of discussion around them that makes people become aware of the very issue. That there's a man who's approached me a couple of years ago. It turns out that he's the head of l'AGFI, which is a source of information in Switzerland, and he keeps sending me information. At the time we met, he was quite aggressive in terms of, he had attended my lecture there in Lausanne or Neuchâtel, somewhere in Switzerland. And he was there, and he introduced himself, and he said, well, there are people like you, essentially. But he keeps sending me information, and I would say the position is more and more defensive. The articles are still saying, well, there is no case, but it becomes more and more, apologetic, or there is an awareness. I think that there is a general feeling that there is discontent at the citizen level. I was surprised the other day at the Parliament to discover that. To me, there was a real contrast. I'll be back to you. There was a real contrast when I was invited at the European Parliament. I was still living in the U.S. at that time. I was flown in, so it must have been 2007, 2008, and there were discussions about the issues around the crisis, and the crowd, I mean, the members of Parliament, the European Parliament, were pretty, I would say, well, they were listening, but very, in some kind of indifference. The other day, when the representatives of the Troika started speaking in that very same assembly, it was the same room as I had been 5 years prior, well, the atmosphere was very different. There wasn't proper booing, but I mean, well, borderline, right? Actually, I was there too. It was, people were not happy. People were not happy, and if in such an assembly, which is should be really dignified, if there is a feeling of, there was one particular incident, which is Philippe Lamberts from the Belgian Ecolo Party. I was sitting at a different place than Jorion. Jorion was sitting, but Jorion was in a position to hear exactly what happened. He asked some quite inquisitive questions to the representatives of the Troika. He got no answer about that. And when the session was over, he moved to these two gentlemen who he knew, and you'll correct me if I don't reproduce it, but he said in essence, he says, it's deliberately you didn't answer my question, but this is not over. I mean, we'll get back to these points. And this is new. This is new. There is a feeling that the people is unhappy, and I think there's a feeling at higher levels that this is the case, and that's not a good. These are not good circumstances. Something needs to be done about it, even if only at a cosmetic level. But something needs to be done. You wanted to ask something? Yeah.
Yes. In the case of Switzerland, there's also, I think, a judicial, an effort experimented by the US, I think by the IRS.
Yes.
Called some people before the court of law in the US who are Swiss bankers.
Yes.
Would you place that also within this approach that politicians feel there's a need to address some of these situations? Or is it also maybe because of actual need for increased balance to government budgets?
Yeah. Well, I mean, clearly in the past few years, and the United States have been the most forceful on that issue of tax evasion. It started some years back when KPMG, the big auditing firm, was indicted for encouraging people to create illegal schemes for passing money abroad, and that's not that recent. I think it's probably around 2004, 2005, but there started to be a move in that direction. It started, as I said, through bilateral agreements of, if I ask you some information, please give it to me. The danger there is that there's not enough information from the person or the country that requests information to know exactly what to look for. And there was a case like that around the Cahuzac case, where there was a request made by the French government saying, is there currently an account by Monsieur Cahuzac in your bank? And Switzerland could just say no. It could hide the fact that he had just closed his account to open one in Singapore for that amount of money, because the question was too imprecise. Now, was the government in good faith or not by phrasing that particular request in that particular way? That was questioned also by some of the MPs in France, saying, well, you knew that by asking it that way, they would say no. But of course, I mean, a proper system would be that information is automatically passed. That if I open an account in Luxembourg, well, I mean, the Belgian government would automatically know that I've done so, and for what amount. That would be a system that would work. The alternative, of course, would be to simply cut communication with the tax havens. If one particular country was serious about the issue, it could do so. People say always, well, it's very difficult to do anything about the financial the tax havens. But when there's an embargo, financial embargo done over created for one particular country, like typically for Iran, the way it's done is extremely simple. The compensation, the clearing houses, or these companies that do the communication of all the orders, the financial orders that are being passed, like SWIFT in Belgium, or Clearstream, they are doing some of the clearing. When the United States doesn't want that financial operations still take place with Iran, it just tells these instances that communication towards Iran and from Iran are simply cut off. So it's very in fact, if you want to starve financial tax havens, you can do it through that exact same system, because it's the way it's being done. So if it can be done effectively towards Iran, there's no reason it couldn't be done towards Jersey or Guernsey. It could be done the exact same way. But for the reason I mentioned, states do not want really to do that, for the reasons that some operations need to be done in an unofficial way, and also because, and that's not being said officially, but because it's actually a way of keeping a light control about the whole dirty money that circulates in the world, that depending on countries can represent large amounts of money. I'm currently reading a manuscript where it says that for Japan in 1990s, dirty money represent about a quarter of the money circulating. That in Mexico, at some point, it could, linked to the drug trafficking, it could be up to 40%. That at the time of the pyramids, of the Ponzi schemes in Albania, that the money passing through was actually more than the local GDP, because the Italian mafia was using that as a way of laundering dirty money also. One of the essential difficulties in the background of all this is the fact that there's a principle that seems to be agreed, I would say kind of universally, that there is no reason that labor should be taxed less than capital. As you know, in the most radical interpretations, like the one uttered initially by David Ricardo, who was a banker, but then being, taken over by Karl Marx, that every capital in some way is some labor that was made at some point, and that's not being assigned to the person who was actually producing that labor. There's been some spoliation, there's been some predation on labor that has produced capital over the years. But a general principle that seems to be agreed is that there's no reason indeed that gains from capital should be more lightly taxed than those from labor, at the least. But through lobbying, through different types of actions, at the legal level, at the legislature level, it turns out that in most countries, when you look at things, well, it is the case that that capital is less taxed than labor. It is definitely the case in Belgium in particular. And that's not because there's been any agreement on that principle, it's just because whenever you establish some equality there, it's being eroded over the years by this particular law or that particular law. I saw a figure about France that there's actually 40% of gains on capital benefit either from exemption or from a reduction in the payment in France, 40% of these operations. one reason or other, which may be justified by helping the economy in one way or other, because there are some producers of this or whatever that are in some particular difficulty, or as you know, because the people who are involved are people who vote when there are elections. These are the people who vote in one particular direction, which may be helpful for the particular government. It's been a tradition in Europe, at least between the two world wars, that peasants were people who would vote for the right, and so typically, right-wing governments would reduce taxation on peasants because that would make them happy, and they would re-elect their representatives. It is an endless fight to try to put some equality between the taxation of capital and of labor, and because once you have money, you can put some of that money in lobbying, and therefore keep trying to push back the legislation on the issue. In the same way I gave examples last time about when you have money, you can actually not only help removing some rules which you find negative for your business, but also prevent them from being voted, from being applied once they've been voted, and so on. Or it turns out to be a quandary like the one I mentioned about Dexia that leads the supposed common good, general interest, to coincide with that of the financial sector, because it has found one way or other to put itself in a situation where you will have that so-called privatization of gains, but socialization, redistribution of losses over the whole population. I think I've covered more or less what I intended to tell you today. There's a little time left if there are any more questions.
I think Warren Buffett made the point when he said at one point publicly that he paid less taxes than his secretary.
Yes, yeah.
That's the U.S., it's another model, but it was quite shocking to people that he was willing to come out and say.
Yes, indeed, yeah. There was a discussion, there was, when was it, in 2009, I think, in France, where there was also special effort from the big, very wealthy people, that they would contribute a big kind of donation to the system. And there was maybe not a majority, but there, a number of these rich people said they would do so. But then as soon as they said that, one of them, was it Père Levade? Who said, well, Monsieur Père Levade said, well, maybe this should become a recurrent principle. And then even these 40% of people who had agreed with that say, oh, no, that's too much. Warren Buffett is somebody really interesting in that respect, because he makes these, he disinherits his own children, puts all the money in a foundation, says there's a class war and it is people like me who are winning, and so on. He's making this quite interesting, that looks like siding against his the group he's part of. Quite interesting. There are some other people like that, like George Soros also, who's making some of the most interesting proposals right now about how to reform the financial system, or his suggestion of saving the Eurozone by asking Germany to leave it, and things of that particular, quite provocative too.